Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors, and welcome to this Friday edition of Benzinga's PreMarket Prep, our final show of the week, brought to you by Thinkorswim. I'm Spencer Israel, as always joined by Joel Elconin and Dennis Dick. We're fired up today for a few reasons. One, we got a jam-packed show for you. Two guests, Mike Bailey at 8:15. He is the Director of Research at FBB Capital Partners. And then at 8:35, Adam Button will join us. He's the Director and Currency Analyst at Forex Live. But we are also pumped up because Kevin O'Leary, Mr. Wonderful himself, is coming by the Benzinga HQ today to give a little talk about what it's like being so wonderful as Mr. Wonderful and what it's like being on CNBC's Shark Tank. So looking forward to that. If you're in Detroit or the Michigan area and you want to stop by, there is an Eventbrite that I'll throw into the chat. But we're all pumped about that. Joel, you're pumped about the markets. What's going on there?
Well, I'm also pumped about tomorrow. The Michigan-Indiana game is, I will be on the field before the game starts, running under the banner. My sister's being honored, so that's really the only thing I can think about. Well, but the S&Ps, we'll talk about that, making a new all-time high here. Basis the December contract, 86.75. That's where we're at. We dipped down to 76.50. That was short-lived. Back up here. We'll see if we can just continue. 21.90, 2200. No resistance on the upside. Crude trading down 20 cents, stalled a little bit yesterday. Gold and silver considering their descent north. I don't know who we were talking. I think it was Glenn Me. We were looking at the gold chart, looking at those daily highs. And boy, I hope you were using that as resistance because we are now knocking on the door at 1200, 1201.30, the current low. Dennis, 802. We're right on time today. How you doing?
S&P's flat here, Joel. What'd you do last night? Did you pull the plug?
Oh, 20. I pushed them down so I can buy them cheaper. I mean, you know, you can push it around at night, so you put the big offers in there, get it down, and then they hit your bids.
That's what they do. They do push them down at night, and they do push them around. And, you know, we've talked about that before. Your major moves happen between 8 p.m. and 4 a.m. because less liquidity out there, less other trading instruments to basically, look at. And obviously that allows liquidity to be a lot less in the S&P. That's when they push them around.
Right, and just keeping an eye on the all-time closing high, 84.25. We're only 75 cents above that.
And also, they're pushing them around here today. They're going to push them around because it's options expiration here, Joel. And we know on this third Friday of the month, you can see excessive volatility at the open and at the close. More so on the open than the closes as of late, but sometimes some big imbalances or big institutional orders where they're jacking against their option positions can really push a price of a stock a little bit too high or too low. Great opportunity sometimes to enter or exit a position. I know option expirations are usually my best days of the month.
I should get a little volatility. Keep an eye on your major strike prices. See where they're being hidden. See what kind of push and pull activity the call owners and put owners have on the trading action. But for now, just hanging up near the highs of the day.
Let's jump into the earnings parade here from last night. Retail earnings season does continue. Salesforce.com, the big winner chicken dinner from last night. Stock trading up $5 here in the pre-market, up 7%. CRM, how was the report, Mr. Spencer?
Q3 EPS 24 cents versus 21 cents. Revenues of $2.14 versus $2.12 billion. So nice beat there. They see their Q4 rev coming in higher. EPS coming in about in line. Fiscal year 17 rev coming in much higher, and then the fiscal year EPS coming in higher as well. So higher all around there at CRM, which is everybody we talk to uses Salesforce and for business, and it seems like everyone loves it.
The best opportunity was to buy it back when the rumor was they were going to buy Twitter. When the CEO said some positive comments about Twitter and the stock tanked that day down to $66.77, that was the bottom. And then obviously they stepped out of the Twitter rumors, and the stock has pretty much been straight up ever since. Now you get a good earnings report here too, and the stock is back at 80. So got killed because rumors about Twitter purchase, and now it's back up and not even that far from all-time highs. The all-time high up at $84.48.
My thoughts exactly when we were talking about the rebound here. I can see. I remember that day in October when it dipped under $68. They didn't do the deal. You got a double top at the 81.40 area. Really not much on the dailies to lean on that. Did have some major resistance at 77. We're blowing that away. Let me see. A top of a consolidation period here. 82. I'll give you another level if we get through that pre-market high. 82.12, 82.19. Those are your highs on July 26th and
I'm scared
27th.
though on this one to be fading it just because of the whole Nvidia. I'm not saying this is anything like Nvidia, but it seems like in this Trump market, when you get a really good report here and you start getting close to those highs, I like to push them up to those highs. So I almost want to propose, and it ain't gonna be a steak dinner bet here, but I almost want to propose a lunch bet, trying to win my lunches back here with Joel, and I'm thinking about taking 82 versus 79.
That it trades
It's
there.
out there. 82 versus 79. I've thrown it out there. Bid is out there.
Close above or just hit?
I'll do either. Which one do you want?
Oh man, I'm out. It's gonna.
Oh!
I'm out. You
You're
avoided
the,
me
you're
for
the, you're the fader, though, Joel.
I
I'm
don't
setting the
know.
screen up for you to fade this earnings report. I'll
Uh,
give you either 82 or 7,
I don't.
82.
I don't follow this stock. I'm hands off on this one. I just don't have a feel.
I think it's going higher. So that's my opinion on CRM. The Gap, GPS, well, I think that one's going lower here because it's down $2.09 this morning. And the Gap, do they ever report good numbers? I mean, let's look back, in history here at the Gap. And I know it's been on this ridiculous run up since October because they've been buying every retailer. But if you go back and look at the reports, it always seems like Gap's down on its earnings. And even though it's been running straight up in its earnings report, it gaps down again anyways, as they always seem to disappoint on the numbers. What did they say last night to disappoint the street this time, Spencer?
Q3 EPS 60 cents. That's in line. Revenues 3.79 billion versus 3.74 estimates. So pretty good there. They see Q4 EPS at $1.87 to $1.92. The estimate was $2.02. So that's what's lower. Another question for you: have you ever been in the Gap and seen anybody else in there besides you? Because whenever the handful of times I've gone to the Gap, I've been like the only person in there.
10 years ago, or maybe 15 years ago, the place was hopping. The Gap was the cool place to be. Everybody was in there. The stores were packed. I mean, this is the way these stores go, though. So, that store in itself, the traditional Gap store, I don't think that's their bread and butter anymore. They've got Old Navy, and they've got what is a Banana Republic. They got a few other chains there that are kind of holding up their end of the bargain. But, I mean, the legacy Gap stores, I think that fad is just over.
All right, given the pre-market.
Joel, you've never been in a Gap before.
Yeah, I have. There was another person in there. I went in there with Lisa.
There was another person in there.
Yeah, I went in there with Lisa.
We got cutting in and out. We apologize. We haven't had any audio problems since we switched over to YouTube.
No, and I'll tell you why we're having problems today. I'll tell you exactly why.
Why?
Because a half hour ago, Joel said, "You know what, Spencer? I don't want to jinx it, but we've been really good lately with technical problems."
Joel,
that happened.
Did you say
that actually happened like a half hour ago. So.
Joel. Yeah, we're blaming Joel. Now you're blamed for everything. We're blaming you for this too. That is the worst thing to possibly say. So you totally jinxed the show here now.
I did.
Well, actually, we 5 times in the last 2 minutes. We're having some difficult audio. Do we want to try to restart the stream here because everybody's complaining about it in the chat? We apologize for the audio difficulties here, guys.
We're gonna we're gonna take a break and we're gonna restart this baby and we'll be right back.
Back, traders, covering some earnings reports. Hope this is coming back. Surely let us know in the chat how we sound now. Dennis, more earnings stocks.
Yeah, so let's jump in here and get to some more earnings stocks. I'm not sure if you have to refresh the show here, so I don't know if anybody's listening there because my audio stopped, but I think if you refresh, then it should be working here. So try that here. We're sorry about the audio difficulties here. We've been on a roll. Tell Joel jinxed us this morning. Let's talk Foot Locker FL. That stock is trading down $1.60 in the pre-market. It had ran up into yesterday. It ran up into the report. Was trading up after hours last night, and then they pulled the rug out from under it here this morning with the earnings report. Spencer, what'd they say?
Q3 EPS $1.13 versus $1.10, so not bad. Revenues $1.89 billion versus $1.89 billion, so in line. Q3 comps up 4.7%, so overall pretty good report. But what are they doing?
Stock down $1.60 pre-market.
All right, 68 at 66. That's your pre-market low. Trying to reclaim the $70 handle here. That hasn't happened yet. Looking at that pre-market low of 68, 66. Man, you are just taking a stab in the dark trying to buy it here. I'll show you on the daily chart. You had one major bar here. Boom. You got to be looking at this bar here the day that you went from 65.76 to close at 71.63. So let's call $66. I mean, there's just nothing in there. If you're trying to cover something, maybe the half and whole handles, find out if you're getting hit. But scary looking chart there. Needs to get back above 70 for a rally.
Then we got Abercrombie and Fitch, and they disappointed. I guess we should have taken the cue from the Gap last night because I feel like most of these stores are the same thing. Gap disappointed last night. Abercrombie disappoints this morning.
Q3 EPS 12 cents, sales of $821.7 million versus $830 million estimate. Comps down 6%.
Stock down 10% here at Joel. Abercrombie have been on a little bit of a run since the Trump, but now it's coming all the way back in. The only thing, though, and what did we say? We said the opposite of overhead supply is what?
Underneath demand.
Underneath demand. And I think there's underneath demand here in the 14 handle for the stock. Traded there for about 2 weeks in November. 14 was your low there on the move. I think people will be bringing it in, especially if they're shorted. So I think there's underneath demand in Abercrombie and Fitch, and I like it in the 14.
You can't argue with Dennis on this one. 14.38. That was your low on November 7th. 14.30 is your pre-market low. The low of the move, November 9th. 14 even. Buyers in the 14 handle. Dennis and I are in agreement on this one.
And then last night, we also had Intuit report earnings, INTU, and that stock was kind of all over the place a bit last night. They initially hit it, I believe, on the report. Actually, no, they didn't. I'm making that up, but, well, a little bit. It was down to 112 handle there. What's Intuit numbers, and then we can try to analyze the tape.
Q1 EPS 9 cents versus 3 cents. Revenue $778 million versus $756 million estimate. So a nice $20 million beat thereabouts. On the revenue, they see their Q2 revenue coming in higher, their Q2 EPS coming in about in line. Fiscal year 17 revenue coming in higher, and their fiscal year 17 EPS coming in line.
Stock sitting here, Joel, sitting here. We got to get a cue from you. I do see a little bit of resistance up here at 114. Trade 100 shares there. Somebody else is offering 100 shares there, but nobody really sticking their neck out here. What is your thoughts on INTU from a technical perspective?
Two numbers, 1406. That was your 4-day high, and then you got a leap up to 1697. That was your high back in July. So those two numbers, your August high and your July high. That's it. That's all you can look at here. Needs to stay green. You certainly want to see that because that was a huge bar from yesterday. Big rally. Be hard to find support if it goes into decline.
All right, Ross Stores, Applied Materials, Williams Sonoma, the Buckle here this morning, BK. You've had a number of earnings reports here. Not going to have time to get to all of them. We do apologize. Is there an 8:15 guest? I didn't even know that.
There is an 8:15 guest. I was about to say, we don't have time for any of those stuff right now, so we're going to go grab Mike Bailey. He's going to be talking Caterpillar, Home Depot, Lowe's, Valiant, Mallinckrodt. So we got some good ones to talk about with Mike, Director of Research at FBB Capital Partners. So we'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel working the boards. We got Mike Bailey on the line, Director of Research at FBB Capital Partners. Mike, how you doing on this Friday morning?
Not too bad. How about yourself?
We're doing well here. Going to be a beautiful weekend in Detroit, except for the snow tomorrow. Director of Research at FBB Capital Partners and Chair of the firm's Investment Committee. You're responsible for monitoring and analyzing macro and microeconomic data. So my question is, on the night of the election, were you monitoring the S&P 500 index futures, and what were your thoughts?
Great question. So I certainly was keeping an eye on it. However, I was taking a little bit of a longer-term view, and we certainly have seen some crazy volatility over the last couple of years. And I guess I thought about the risk-reward of staying up all night and staring at the futures versus getting a decent sleep and knowing I'd have to be in the office early, kind of dealing with the fallout. So I took the latter option and sort of woke up. Luckily, I think that particular bet sort of worked out in terms of the future settling down later, but it was an interesting move. For what it's worth, we've got kind of a volatility mean reversion theme, so we own some of the equity exchanges out there, so that play certainly helped at that time.
Talk about mean reversion theme, because I've been talking about this on the show, and mean reversion's been a tough trade here lately. Because these trends are so persistent here. I mean, the financials have been straight up. You got some of the yield stocks straight down, and I don't know. I was trying mean reversion for a while, and I backed off my mean reversion trading because it's not working.
Yep. Good point. And I suppose it kind of depends on your time frame. So the one we're looking at is basically just the VIX, for example, and volatility. We think that, for example, last summer, volatility just got unusually low, and we felt like it's going to sort of come up to a more normalized level. So one of the exchanges, CME Group, for example, if you get higher volatility, some of those exchanges are going to do well. So we think that that's going to happen. Again, we're not picking an individual catalyst or moment, but we really think just over the next couple of years, you're going to see volatility come back up.
Just speaking about I was going to ask you just about the exchanges before we change the subject. Do you see any more consolidation there? Obviously, we got the merger there a couple months ago. Do you see any more exchange consolidation ahead?
Tough to say. We like I said, we have seen the field kind of shrink down to a few big players. It's hard to say. I mean, I know NASDAQ, for example, looks like they were having a new CEO. A lot of times when you see that, it's unlikely that that company is going to get taken out, for example. So I think that's one company off the table. So my guess is the dust settles a bit, and I think the big players kind of stay as is for a while here. You could certainly see them scoop up some smaller companies, but I think the bigger exchanges are going to stay put for the moment.
What about a couple stocks that were on your list here? Caterpillar. This is a stock that really has benefited a lot from the Trump market here. Stock is trading about $85, got up to over $95 just over a week. Is this too much too fast on Caterpillar, or do you still see more upside in a stock like this?
There could be a bit more upside, but I think the major move has kind of already happened. I'd maybe lean on a little bit of analysis I've seen at Deutsche Bank. I think they do a pretty good job of taking a look at what happened and what might be left. I think their kind of bottom line is basically you've seen about 75% of the move up, so about $8 or so, maybe a couple bucks left. Basically for the infrastructure play, we can get into that if you have questions, but I think the second sort of piece to that is if there's an additional bet for mining, basically coal. So if you're a bull on the sort of a move back into coal, I think there's a bit more upside with CAT. I think that's somewhat speculative for us, and typically we do look a bit longer term. So something like a CAT does look interesting maybe in the very near term, but we'd prefer to look at something where you're not really betting on an individual, president or actor administration to kind of drive growth. We'd like to kind of spread our bets over a couple different growth drivers.
Let's go one step back here. You were talking about the volatility and expecting it to increase. Out of the chat here, Bobby Bitt is asking, what's normal for the VIX, and also what indicator do you use to measure the VIX?
Sure. So we basically just look at the straight VIX. We try not to make it too complicated. We're kind of simple people here, but I think so. Just looking at the VIX. So I think it's basically in the kind of low teens right now. If we look over the last few years, we look at just a rough average closer to high teens, maybe 20-ish. It is tough to get a sense of what is a normalized VIX. Just massive spike up in the Great Recession. Sort of do you include that or exclude it? But just we look over history, we do think that you generally have seen a bit more volatility than you've seen in the last couple of years. Especially, for example, last summer, everyone was saying complacency, and I think that kind of got swept away a bit with the Trump election. So, but in general, we do think you're going to see a bit more volatility. There's a few ways of playing that. Whether it's an exchange, you could look at even some of the e-brokers, for example. They certainly do well as you get more trading. But a couple different ways to play that.
Do you try and put anything on for your customers? Did you put any hedges on before the election, or now with this kind of run? Because it's a tricky. I mean, you looked at some of the options, and they're just so expensive. Going into these kind of events, do you just kind of use cash as a substitute for a hedge, or how do you approach it for your clients?
Yeah, great question. So we're kind of a big battleship, as it were. So we typically don't make these major moves, quickly ahead of major events like that. So, our clients, we do look at sort of investing for them over a number of years, as opposed to some of these individual catalysts, like I said. So, yeah, nothing. We didn't put any major. We typically don't do derivatives, but I guess the one move we did, which I suppose better to be lucky than right, we did sort of round up some bank holdings ahead of the election, and basically just wanting to get a bit more interest rate sensitivity. Really didn't think that you'd see a spike in rates, immediately after the election, but I think that ended up working out okay to get closer to kind of a market weight in terms of interest rate sensitivity.
What about these moving these financials? It's another one that feels a bit overextended to me, but I mean, it just keeps on going. I mean, Bank of America's had 7 of the last trading days have been up, and that's one little down day in the middle of it. It looks like this path of least resistance just continues to be higher, despite this move being a little bit out of the ordinary.
Yeah, I mean, I think so. I think with the banks, I feel like there is another leg sort of to move up. I mean, it seems like the banks are sort of left for dead for quite a while, basically, with people just waiting and for any kind of upward move in interest rates, and we're just starting to see some early moves here. I think you're probably going to see rates continue to creep up gradually. By the way, if Trump actually does something to juice the economy up, I think faster GDP growth, that's also a nice kicker for banks. So I think there's a couple things going for them. And like I said, I think they were so depressed that's certainly going to help them on the margin. And I suppose the last footnote there is if you get any kind of wind down of Dodd-Frank or just less regulation, that's certainly a sort of a third growth driver for bank earnings.
What about pharmaceuticals? Because the pharmaceuticals have been on a pretty good run here too. Not nearly as much, obviously, as the banks, but they got an initial lift here off of Trump. Do you think, now that we don't have Hillary and she was talking about potential price caps, do you think the pharma sector is another sector that could benefit from Trump?
Certainly could, but I think we sort of talked about infrastructure in other areas. We've seen certainly a rapid move here just right after the election. Probably a bit more upside. Yeah, I think there's certainly some additional risk built into look across the pharma kind of food chain. It's not only the drug companies but also distributors and retailers and such. There is still a lot of pain out there. So another way of playing it might be instead of owning the molecule companies, look at the service providers. So we own some of the distributors and some of the other pharmacy benefit managers. Some of those valuations are still pretty depressed. If you were to argue that pricing pressure is sort of off the table, I think you could see some additional upside throughout healthcare, but perhaps on the services space.
Let's move on to a couple issues that I reported earlier this week. And Home Depot and Lowe's both got hit, but had some recovery here, volatility. The charts almost look the same here. How are you interpreting their Q3 earnings reports and moving forward?
Yeah, so we are a bit surprised. We do own Lowe's, which has been a little bit tougher for us over the last couple quarters. But typically the companies do move together, so it was kind of surprising on the fundamentals to see Lowe's Depot. Basically similar business models with just some different geographies there. But in general, I think they have been sort of fitting into the sort of general improvement in housing. So that's certainly nice to see that be fairly consistent. Again, just a bit surprising though with Lowe's kind of taking down their guidance, I think a couple percent versus Home Depot doing a bit better. But I think basically so we've seen a lot of big housing numbers. There was one came out yesterday. I think that was kind of eye-grabbing, if you will. But the metrics we look at are a little bit longer term. So we look at employment in general. So if people have jobs, they've got money, they're going to sort of buy a new house or fix up their old house, and then rates and mortgages. So we do think you're going to see mortgages start to creep up a bit, and that could kind of keep a lid on housing somewhat. But I think for the most part, you are going to see employment looking pretty good, and I think that's probably the best growth driver for the sector.
One more for you. A stock that's been in the news, Mallinckrodt, Andrew left, comes out, hits the stock after it had a nice run up, now approaching the lows of the move, getting a little bounce today. Any comments on Mallinckrodt?
Yeah, so I mean, for sort of big picture, we struggle with this sector, the specialty pharma sector, and we have before Valiant and before the short letter here that came out this week. So we think it's sort of a low quality business model to begin with. Having said that, just sort of getting into this particular issue, my sense is I would tend to agree with management over at Mallinckrodt. I mean, I think there are the short report, I guess, is saying that this one drug, Axar, has got major exposure to Medicare. Just sort of looking at it from some government filings. Our sense is there's probably some rebates and discounts in there that take that Medicare exposure down a bit, probably closer to what management's talking about. I think 25% of sales coming from Medicare and Medicaid. So certainly a bit of a controversy at this point, but there's a lot of kind of drug pricing is a little bit of a black box, and including even when you look at Medicaid and Medicare. So I would expect management's view to be a little bit closer to reality at this point.
We've been on the line with Mike Bailey, Director of Research at FBB Capital Partners, giving us a nice look at the overall market and some individual stocks. Thanks a lot, Mike. We'll talk to you again soon.
Thanks a lot.
All right, 8:30 here, Dennis. How the imbalance is looking?
Small again. This is the one day where imbalanced data doesn't mean that much because there's so much institutional flow that'll come in the last couple of minutes. Right now they're looking very mixed, which is a typical for a day that you're down a point, up a point. But even looking just highlights like Alibaba 38,000 to buy, they're all too small here to even mention because I know on this day you get like 925 and big institutional orders start coming in and they go everywhere. So all the action on this day comes in mostly in the last minute or two. So balanced data pretty small here as of yet.
All right, a couple issues from FLAC UK in the chat to talk about, and charts going opposite directions here. Ameriprise Financial, nice run up here. I'm not sure if earnings or just the market, but boy, seems to be hitting the wall 115 here, and boy, it had problems there back in late November, early December of last year. Man, what do you think, Dennis? I just think it just needs to blast through 115, get a close above there.
Yeah, the trend would continue if it could get up over 115. You look at this and you think, holy cow, it's overextended. But a lot of times what you see, this is a flag. A lot of times what you see is a big run up, then the consolidation, the continue of the original move. So if I was, just had to make a bet here, I would probably, first I'd probably wait until I actually got confirmation and got the breakout there. But starts going 116, I think it could be at 120 in a heartbeat.
And I'm on the other side here. If you take out 113, now the last two lows, 1309 and 1299, you got some look at the downside. So kind of quiet moves after the big run up. And then the other chart from FLAC UK, kind of going the opposite direction here. EMP, an issue I'm not that familiar with. New one pretty much has gone straight down.
Utilities.
2114.
This is a preferred stock. Wait, okay. EMP? What is it?
EMP.
So Energy Mississippi? This is preferred.
Yeah, what do you think? You're the preferred expert. What do you think?
Well, the preferreds have been getting hit. We haven't talked about the preferreds on the show in a long time here, and I still, I obviously, a lot of my investments, a lot of my, I trade the preferreds from an investment standpoint. I also trade them from a trading standpoint. The preferreds have been hit. It's, defensive. They move with bonds. So bonds, we know, have been hit since Trump has come in. And the preferreds have been hit as well here. This is out of the ordinary for this one. This is a pretty big extended move. Typically, usually when the preferreds get hit 10%, they're usually buying opportunities. I don't know anything about this company specific, but you look at one and they're hard to bring up on the system because the symbology is all different depending on your platform. But Bank of America has some preferreds that literally got crushed, and they've come back a long ways from the lows. But if you just want to see what it's doing overall, bring up the PFF. That's a good, tell for, what preferreds have done. That's a very well followed preferred index there, and it got really hit hard. And now we've been bouncing back a little bit, but I still think, if interest rates are going up, preferreds could still stay under pressure. So I'm holding off buying any preferreds for now. I think you might get a better opportunity a little bit lower as we get closer to that December interest rate hike.
The rate that hike is for sure supposed to go, and then again in every month next year, based on the financials here, that is.
That's what they thought last year, too, though. Then we didn't get any raises until we haven't had any in 2016 yet. So we're looking at, obviously, December, we're probably going to get one. I think the Fed's going this time. But it's, a quarter point does not really make a huge difference. I don't know. You're seeing some of these stocks, some of these preferred stocks, but not even that. Some of the defensive stocks like the utilities are pricing like we're going up 1-2% here. And I just don't think that they're going to go, to an extreme rate rise environment here. I think they might go to a quarter. Maybe they go another quarter earlier in the year, but all depends on the market as well. But if I can't see them really raising rates a long ways. We've talked about this a lot on the show just because everybody's so laden with debt.
And, they were supposed to factor in 4 rate hikes this year. And they
haven't had any yet.
Really, no, because the other one was in
December of last year, wasn't it?
Exactly, and that's what hit the market in January. 8:35, we're going to grab Adam Button, Director and Currency Analyst at ForexLive.com. He'll give us good information on the currency markets and get his take on interest rates. We'll be right back with Adam.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. We're lucky enough to have Adam Button on the line. He's director and currency analyst at forexlive.com. Adam, how you doing on this Friday morning?
It's a happy Friday, doing great. Loving the market action since the election.
All right. Well, first, our last guest that we had on, I asked him about his observations from election night, and I know you watch the markets around the clock. What were you thinking at the price action when you saw those S&Ps down to limit? Did you just buy a couple and go to bed, or what were your thoughts?
Yeah, you know what? Everybody's a genius the next day, but at the time there was so much uncertainty coming in. We were talking about in a few weeks or even a month, maybe the market would start to buy, the dollar would start to buy equities because the idea of stimulus coming. But the market was, in everything, the timing is critical, and the market picked up on it, bought that dip, and went for a rip, and that idea has continued until now. Eventually, Trump will have to deliver, but on election night, it was the same as everyone else. It was that fear and uncertainty, and trying to put it back together was a difficult thing to time right from the bottom. But as usual, it was sort of a buy the rumor, sell the fact kind of trader. The adverse, in that Trump, once he came out and made that victory speech, and once it was officially announced, that there was that sigh of relief, and that sigh of relief is sort of somehow the clarity or the certainty has carried us right until today.
Got to talk.
So
go ahead, Dennis.
I was going to say, so what's the currency market? What's the U.S. dollar, saying about Trump? I know we've seen it. I watch it very closely against the Canadian dollar because I'm Canadian there. But how's the U.S. dollar looking against some of these other currencies since Trump has got in?
It's on an absolute run. It's been very strong. It's two ideas, really. One that there will be some stimulative spending, and that will get the economy growing in some sense next year, and probably push rates up. And number two, there'll be larger deficits, and that's pushed up yields in the bond market. And comparatively, when you can get a bond, if you're a Chinese investor, for instance, it's almost 3% in the United States. Why not buy that instead of getting 0% in Japan? And that money is flowing into the U.S. dollar and propping it up right across the board, especially against emerging markets. Of course, the Mexican peso hasn't recovered either.
So what are you looking at when you're looking for a turn? I mean, you've had 1, 2, 3, 4, 5, 6, 7, 8 up days on the daily chart. This is basis the U.S. dollar index futures. I mean, you can't say the rally's over after just one little down day here. What are you using? You're looking for a little retracement here from 96 to 101 change, or economic data? What do you think is going to turn the tide in the U.S. dollar?
Yeah, it's 2 days. The calendar is one thing you always look to. I mean, December 14th is that Fed hike, and ultimately nothing's changed in U.S. politics yet. Nothing will change, at least until January, the end of January. You can price in what you think might happen, but it's tough, and I think the market will get a little bit antsy about some of these ideas about deficits, and you have that natural sort of second thoughts. I don't think those are going to be a big factor. I don't think this retracement will be much, and I think the trade is to buy the U.S. dollar until getting close to the Fed decision, and then we'll see what they say. And of course, the economic data matters as well, but I think there's so much momentum priced in Q1 and Q2 that if we were to get a dollar dip based on poor economic data, I think that's a buy at this point.
Talk about the Fed decision here. We were just talking right before you came on the show saying, I think they're going in December, but, longer term here, like some of these yield plays are pricing like they're going up, 4 times next year. And I don't know if I see them raising it that much. I definitely think we're going in December, though. What are your thoughts here, on the next Fed rate hike and then looking out to 2017?
I think there's a trade to buy bonds here because you're absolutely right. This 3 hikes next year idea is precarious at best. I think probably the Fed goes in December, and the momentum and positive sentiment in the market will probably push them to go again in March. But then the kind of reality hits that it's not easy to wave, a magic wand to make America great again. And it will be a struggle. Congress is inept, even if it's run by one party, and it will be a challenge to change things. Yes, there's going to be deregulation, and that's good for sort of pharma and some repatriation, which is good for stocks in the short term, and healthcare and financial should do well. But a lot of that's already priced in. And so, as the Fed comes in and they hike and then they hike again, I think there's going to be some fear that comes into markets to say, that we don't know this is going to happen. We need to see profits. And, we've been needing to see profits for a long time right now. And until they materialize, whether it be through tax breaks that need to be delivered still, or global growth or American growth, that needs to happen before we get a real leg up in stocks and that dollar momentum continues.
Adam, talk about the Canadian dollar. You're in Canada there. I'm obviously Canadian as well, so I'm always interested in the Canadian dollar. I know we have some other Canadian listeners there. What are your thoughts here, going forward? Obviously, Canadian dollar is more of an oil currency here, moves around with the price of oil. What are some other factors that might affect the Canadian dollar, and what do you see for 2017?
I think it's finally the year of housing. The Canadian housing trade is one that every global macro fund has tried on for size. A lot of them have been burned. The prices of housing are way out beyond where they should be or where they need to be, and it's starting to crack. Now, a big global trade like that, you can't take it until it happens. But I think 2017, it's finally starting to crack, or the government reins it in, or some sort of misstep. It's in a precarious spot right now. And when it starts to unravel, I think it can unravel relatively quickly because the economy is soft and the government has spent a lot of its ammunition. Or they may be willing to reach back for more, but I think they want to let a bit of the air out of the balloon, and there will be a fright there. And I think that's what gets dollar CAD up to 140 or even 145 again. And not too distant future. Of course, you mentioned oil, and that's a big factor as well. I'm bearish on oil. But right now it's a tricky trade on oil until you get past OPEC and get a real sense of what they're going to do. Of course, they're going to fail at whatever they're going to do, but it's impossible to short oil with that risk of a 5% squeeze in your face or, overnight on OPEC headlines. But ultimately, I see overproduction from the U.S. as well. Yes, some pipeline factors from Trump and American politics might be good for Canada. And there's some stimulus in the pipeline, but I just don't see any compelling reason to buy the Canadian dollar, and the Bank of Canada is likely going to cut early next year.
And what about the cable or the British pound? Haven't got back to that flash crash low of 1.2034. This is basis the futures here, but just kind of grinding down. Brexit still hasn't been completed yet. What's your outlook for the British pound versus the U.S. dollar?
There's two things. There's this court decision, which I think, I don't pretend to be a legal analyst. It's a tough one, so there's this risk they could invalidate the referendum and force Parliament to vote, but I ultimately believe that Parliament will have to vote to respect the referendum. So Article 50 is coming before the end of the first quarter, which is what Theresa May, when she promised to invoke Article 50 to leave the EU. And I think that's the day or thereabouts that you can finally buy the pound. I think the market is scared to buy it, and I think the trend is down until that day. And once it actually happens, similar to the U.S. election when it was over, and okay, it's Trump, and they'll come out and say, listen, we're going to do this. It's not going to be so bad. And on that day, you probably see the pound kick down a couple cents on the announcement, but then it starts to creep back. And I think that will be the low, or an interim or a tradable low in a big way for the pound. So until then, no, it's down, or it's muddy and to the side.
We've been on the line with Adam Button, Director and Currency Analyst at ForexLive.com. Great information. Adam, can we get him back on for when we have the unemployment number on, when is that, the first Friday? Maybe, Adam, we'll check with you and see if you're busy then. We love your well-rounded analysis.
Yeah. Thanks for having me, guys, and have a great weekend.
All right, Adam Button, Downward Dog has been very patient here in the chat, and he wants to ask about 3 stocks here, Dennis. We'll start with Allergan. Tough ride there for Phil and Allergan. Coming back down to the 200 level, the takeover, the no takeover, the bad earnings. Icon dumps his position. I mean, kind of don't mind this thing under 200 long term. I mean, if you could take,
it's worked.
Yeah, if you could take 14 points worth of heat down to 186.34, I'm kind of liking this one, and looks like you got a triple top you're trying to clear.
I mean, it's worked. I mean, buying under 200 has worked a few times here. Obviously, the big pop there after Trump, and it's come back in here now. I like when they come back down. I like it better at 190. 3 days ago, down to 189. Now it's up here 200. It's like you said, you kind of got to give. If you buy it here, you almost got to give it to the low of the move, which was way down at 186. I hate giving something 13 points, so I like to pull in here, but I do think you got some pretty good support down there at 190.
All right, also coming from Downward Dog, he's asking about NTX. Is that what's the stock? NTNX. Take a look, Dennis. Give us all your technical thoughts on that one.
Know nothing about this company here. I can tell you though, you obviously had the big down, and we don't have a hell of a lot of data here. It's only been out since October, so. Looking here just at the chart, you had the big run up. You often see that after an IPO, the big spike up, came back to kind of retest, took out its lows there from then, and then it's put in a bottom down there below 25, and now you've been on a pretty good run, a pretty good move here. A little bit of a red candle there is concerning from yesterday. I'd say above 34, it starts to get bullish looking again here, but I'm concerned about the red candle from yesterday, and I think I'm a fader until I can break out over 34.
Yeah, I'd like to see this thing continue to creep up here. 46.78, that was the high a couple days after the IPO, down to 23.11. Now 50% retracement would take you back to the 35 and a half area. That's what I'd like to see. I think the longer it takes to get that area and test that area, close above that area, maybe signaling this move, this little retracement, maybe over with. And then the last stock from Downward Dog, Zotis, I believe. ZTS, is that the right?
Yeah, is that, I'm trying to think. I think that's the animal drugs, isn't it?
Yep, the Pfizer spinoff, right?
Yeah, and this stock I've been interested in this one before, looking at it here, and it's had a little bit of a run. The problem is pharmaceuticals have been so out of favor, and this stock really hasn't pulled back that much, and that scares me a little bit. But I mean, if you want to buy a stock, that has good relative strength relative to the rest of the sector, I mean, this really has over the course of the last year or so. I'd say about 47. I could argue, trying to call, or trying to, nibble on some here. It starts cutting up below that low that we had back in November, just at the beginning of November at 46.86. Then I'd start getting concerned.
Okay, I would say Downward Dog, just keep an eye on the short-term trading action because you had an inside day from yesterday. The high was 8 cents apart, the low 3 cents apart. So look for a move. Use those areas as support and resistance, and could get a move one way or another, breaking out of the top of the inside day or the bottom, just hanging out here at unchanged. 849 S&Ps are just hanging up here, Dennis. 2184, couple points off the high of the day. Where would you like to go next?
Well, we've went 50 minutes here, and we have not talked about dry ships yet.
Okay.
Is that why everybody's done talking about dry ships now? Here that the buzz is officially over. I mean, here's the stock goes from $5 to 102, gets halted by the exchange, reopens yesterday at 51, and then I'll say it, kaplooey. Stock comes all the way back down to $11. Close at 11. It's trading at 12.50 today, so it's a pretty good morning here. It's up $1.50, 13%, but holy cow, man, the fall from grace here was so fast. Usually these things take a few weeks at least, to give back most of the gains. This thing gave it all back in one day.
Yeah, the halted for a day. That the secondary that I mentioned, you said it was like a preferred. So basically, we still have no idea the value of this stock. The SEC.
I have idea. I still think the value of the stock is close to zero. I do. I mean, it's going to be crazy. Things like this can happen. But I don't know. This chart was looking at long term. You're looking out. Stocks have fallen, and it's had so many reverse splits. It used to be like $12,000 a share back in 2009. Now you're talking about $11. I think this company's just trying to survive. It's whether they can survive or not is the big question here.
And what are some of the other shipping stocks? Let's just see how they.
Oh, they've all come back in now here, Joel. So it was a fun time. So it was fun while it lasted, folks. It's kind of already over. SHIP. Cool ticker symbol, Synergy. That went from 2 to almost 9. Back down here in the 3 handle, trading the 4 handle this morning. You had Top Ships, TOPS. That went from about $2 up to over $8, and that's pulled back. SINO, the crazy stock of yesterday. And this stock just going back a week ago or a week and a half ago was $1. It went up into the pre-market. I saw it trading like up at $18 in the pre-market, which is just insane. Ace he was really following it close. I don't know how high that thing got in the pre-market yesterday, but it was crazy. Ended up, opening up at 14 and coming all the way back down to $4.95. So that one's come down significantly there. There's 3 or 4 other ones too. ESEA was another one. Went from $1 to $8. Back down to $2.75. So a lot of these have given back 80% of the gains here already in one day. So, 2 days ago we were talking about these things, how awesome, how crazy high flyers they were. And we said, when the dust settles, these things are probably going to end up going, probably back to where they came from. But I said sometimes that can take a few weeks or longer, even, a few months. I didn't think it was going to do it in one day, give it all back. But most of them did.
What is a symbol for the Baltic Dry? Do we have a symbol for the Baltic Dry?
Stock Hunter's talking about it. Stock Hunter, if you're there, let us know what the symbol is for the Baltic Dry Index. I'm sure there's probably some solid companies in there too, or at least a few in there. So, that's probably going to throw it out because he's saying it's just coming back to its 50%. All these charts we're looking at are down much more than 50% here in the last day.
Phil likes, he says SSW is his favorite shipper. I mean, the move,
bigger company.
Yeah. Besides just the craziness and the move and everything, I'm still not being a huge fundamental trader. I'm still like, where's the fundamentals for this? Where's the shipping? Obviously, they got to ship a lot more stuff in order for these companies.
It's not even about that with these. It's about debt. If you look at most of these companies, they just have so much debt that they are strapped with. It's like servicing that debt, especially if you think interest rates are going to start going higher. I mean, it's going to be a tough go for these companies there because they just got too much debt.
I wonder if there was any inside selling in that dry ships. I mean, if you think about magnifying the gains, I guess we'll find that out in a week or so, or when the next filings come out.
Those are unbelievable moves, though. And lesson to be learned here is, and I'll say it again, when you're shorting a stock with a low float and it's under $5 a share, stuff like this happens, and you're getting blown out. So, even though the thing might come back and you might eventually be right, and maybe it eventually does go to zero, you're not holding that thing to $100 a share. You're down so much money. So, I don't like shorting stocks with low floats, and I don't like shorting stocks under $5 for reasons like this, because it can get ugly in a hurry. You're looking at the first day, it goes from 5 to 15. You're like, wow, 15 is ridiculous. I'm not covering it. And then 3 days later, it's 100. So, that's how people blow out accounts. And very dangerous game. Obviously, shorting is dangerous to begin with, only for more sophisticated traders. But when you start talking about shorting stocks with low floats under $5, that is really dangerous. started, K-Bio, something that happened a couple years ago where obviously, you remember that one investor there, was it with the E-Trade, or one of his brokerage accounts, and
That was
he ended up,
in the springtime, in the wintertime.
was it just that recent?
Yeah.
Anyways, what was it that he lost? Didn't he short 10 grand worth and lost 100 grand or something?
I don't know. Yeah,
It was
I'm pretty
crazy
sure
like
it
that.
was
So
last November.
retail, if you're seasoned trader, been trading a long time, you can make a lot of money shorting stocks. I'll tell you, over the years, I've made a lot more money shorting stocks than buying them. But if you're newer to trading and you're shorting, I don't advise it. At least start with some small size when you're shorting stocks, because bad things happen. But the one thing I'm going to warn, just again, is low float stocks, especially if they got a little bit of higher short interest, or if they've got a low price. Funny things happen, and you get short squeezes and buy-ins happening on bad locates, and prices can go crazy, and that's really bad if you're short.
I got a question. I know we have some, mostly retail, some institutional participation here in the show. A lot of people are signing into the chat. I would just like to see how many of you here in the chat. I know some of our more experienced traders do, but just flat out just short stocks. I mean, I know the conventional buy is preached, and with the way the market's been, has been pretty good. But I just be curious, whether or not Dennis maybe and I should do a little special educational segment on shorting, but that could last a couple days. Angie Baby Shorts, yeah, just throw it in there.
Stock Hunter shorts. I think our chat's pretty sophisticated. I think most of these guys do some shorting. Ed Parker uses puts. I felt like UK was asking the same thing. Is it safer to short with options? Absolutely safer to short with options. Well, it depends. If you're buying puts to bet on the downside, I don't think Dry Ships has puts.
No.
So that's not even an option for you. No pun intended. But if you're looking at that's the safer way to do it, is to buy puts. It's the more expensive way to do it as well, though, because you're paying premium. So I don't buy puts because I short the stocks. But the one thing you always want to have, like I say with any single trade, always have your out defined before you get in the trade. Meaning, what's your contingency plan if you're wrong and the stock starts going against you? Because so many investors and so many retail traders will do the same thing. The stock will move against them, or it'll gap down 10%, and maybe they only wanted to lose 2%. They're like, well, I can't sell now. I'm down 10%, and then they're hoping it comes back. And when you're in the hope trade, I always say you're in the hopeless trade, and then you're in trouble. And that's how you can really get hurt, by holding on to losers as they're moving against you. If you're short stocks and you're holding on to those losers against you, it can get very, very ugly in a hurry. I mean, stocks can go up forever. They can only go to zero, but they can go up, forever. And you have a stock like Dry Ships, it's $1 or $2, and going to $100. I mean, you're talking about losing thousands of %. So that's the scary thing about shorting stocks. But there is a lot of money to be made if you can get the timing right in shorting stocks.
Analysts, not much going on. Any one or two particular upgrades or downgrades that you want to highlight?
There's a lot of things I want to talk about in the 1 minute that I have, but First Solar got downgraded to UBS to sell. Tesla Solar City deal did get approved last night. We didn't get to that here either. Both of those stocks are trading higher here in the pre-market, which is surprising to me. I thought they might hit the Tesla. I guess it was all baked in. They were saying it was going to get approved. Tesla stock is a lot lower than when the merger got announced here, so I still think shareholders didn't love it, but they approved at 85% approval, so that deal's going through. And balances have all flipped to buy imbalances here now. Significant buy imbalances, but again, it is very early here. It is only 8:58. It's going to be a lot of institutional flow that comes in the next 32 minutes, and that can change very quickly. S&Ps are not responsive, but just to say, if these buy imbalances hold, looking like a Bank of America 1.2 million to buy, Citigroup 315,000 to buy, Wells Fargo, which is downgraded today, 580,000 to buy, GE million to buy. There's just a lot of buy imbalances right now. But again, I think that those numbers could change very quickly. A few institutions come in with some big size, and those numbers could go to sell imbalances. Right now, S&P futures are trading red, so one of two things are going to happen. Either S&P futures are going to start to catch a bid, or these imbalances are going to start to go back to either flat or sell imbalances.
All right, 8:59. We are going to wrap up the show for this week. Hope we provided you with some good information. Spencer, what's on the docket for next week?
Bit of a short week next week. Obviously, no show on Thursday due to Thanksgiving. We're also not going to be doing a show on Friday. So that's because both Joel and I will be out. So just 3 shows for next week. We've got Mark Mellon on Monday, Ben Carlson of A Wealth of Common Sense, and Nick Sheen on Tuesday. And right now, just Tommy Lackey on Wednesday. If you missed any part of our show today, you can catch the whole thing again on iTunes, SoundCloud, Stitcher, or YouTube. Just Google Benzinga Pre-Market Prep or go to our various channels there. Excuse me. Don't forget about Benzinga Pro. It's Benzinga's real-time news platform. You can get a free 2-week trial by going to pro.benzinga.com or calling us up at 313-723-2000 and just say you're a listener of the show. You'll get a discount on an annual subscription. Last thing, please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. 9 o'clock now. Hope everybody has a good rest of your day and a good weekend, and I hope you'll be back with us on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.